Hey everyone, it's Nick. Lovely that you're able here to join me today. We're a little bit different of a setup today. I just thought I'd invite you all into my living room. Please don't come here physically, but in this video, I thought I'd invite you here. We're going to talk about exactly where you should enter inside support resistance zones. It's very important to trading, but it's probably not important because of what you think. It's important because it gives you a really good way of controlling risk. Whenever you enter at the right spot inside support resistance zones, whether you think price is going to bounce at them, the most traditional support resistance trade, or whether you think price is going to break through the zones. I'm going to show you all about it here in this YouTube video. If you're new here to my channel, I'm just some random bald guy from Texas here in the United States who's made millions of dollars in the Forex, crypto, and stock markets combined for the past almost a decade. I'm trying to teach you how to maybe do the same thing. Most of you guys probably won't make millions of dollars, but if I can help you at least get some consistency, we can make an extra couple $1,000s per month. That's life-changing. Let's go ahead and get into it. So let's go to a chart. Let's actually just pick a random pair here. We'll start at the top, EuroCAD. What I'm going to do is I'm going to use the replay trading tool here on the thing. I'm going to launch replay, and then what we're going to do is we're going to hit random bar. This is going to take us back to a random point on the chart. Looks like we're at June of 2020. So here's what we're going to do. I'm going to show you from the ground up how you can trade simple support resistance with reasonable risk reward scenarios. And you're going to be able to go and duplicate this on your own and practice. Remember, trading's risky. Most of you guys watching this video are going to lose money trading. That's just what the stats are. I'm just showing you what's worked for me and for the thousands of clients that I've coached over the past 7 years of teaching trading. Let's get into it. So whenever we're here on the charts, the first thing we're going to do is we want to kind of start at a little bit higher of a time frame. I don't suggest weekly or monthly, but I certainly don't suggest like the 1 minute chart for starting. Somewhere right in between. The 4 hours pretty good, the daily's pretty good, the 1 hour is pretty good if you just zoom out a little bit. We're going to be on the 4 hour here. Now here's all we're going to do. We're going to draw the most clear support resistance zones above and below price. And that's literally it. So down here, price has bounced 1, 2, 3, 4, 5 times. You'll notice there's zones like this sometimes, right? Now there's nothing wrong with stuff like this. However, whenever you see price break through a zone a bunch of times, it generally just means it's not as reliable of a zone. A more reliable zone would be something like this, where you don't really have a lot of times where price is breaking through it. This was respected as resistance a bunch before it then broke above the zone, came back, tested as support, now it's broken below. You know, it might come back up here and test as resistance before falling. So zones like this are much better. The zones where it's super, super clean, cut and dry, like stuff like this where almost every time it gets into the region, it has a tug away from it. Every now and then you'll see price spike through a zone on liquidity run and then pull back below. But you just want to have the zones where things are super, super clear. The cool part about this is that you don't have to draw a million zones in the chart. You don't have to draw a bunch of schizophrenic paranoid lines. You can just literally draw 2 zones, one above price and one below price. And then you go into trading view, you can click this little plus button on the right side of the pane here. You see that little button? About halfway through the zone, you just press that, and then if you're trading in live data, it'll say set an alert. In this case, it just is going to draw a horizontal line. That yellow horizontal line represents where the alert would be. So here's what we're going to do. We're going to wait for price to get into one of these zones, right? It's not going to go sideways forever. At some point, it's going to get to the zone above or below. And then whenever price gets there, we're going to look to maybe take a trade. Okay, I'm going to show you how to set up everything. So I'm going to click forward on this. We may go up, we may go down. We're not doing anything unless we get there. So price gets up here into this zone. So now that we're here in this resistance zone, here's what we're going to do. You can pay very close attention. We're going to sell. All right, guys, that's the end of the video. Make sure you hit the like button. I'll see you in the next one. No, I'm just playing. So you're going to sell. Here's what's going to happen. We're going to sell here at this zone. Let's say we sold right there in the middle of it. And then we're going to put our stop loss above the zone at a location where it's not too tight, where we're going to get stopped out super quick if it has a little test deeper, right? So nothing like that. But we also don't need to be doing stuff like this where we're dragging the stop out, to like 9,000 years ahead and just waiting for price to get there. Okay, so not too close, not too far. For me, I think this right here is good, right? Price could have a little run above the zone. It could have a pullback. It could spike all the way up here, of course, just like this did over here. But if that happens, I'd rather get stopped out. And then if it pulls back into the zone and starts going down, we can always just re-enter. So it's no big deal. So for me, this stop loss right here makes sense. And what I'm going to do is I'm going to set my target down here at a 1 to 2 risk to reward ratio. This is also reasonable because that's kind of where the sets of recent lows are. So while I'm not sure I'd enter a trade there as a buy at support, just because I don't really think it's super clear for placing trades, I would certainly set my profit target there. So 1 to 2 risk to reward ratio, it's around the recent lows. This works from a viable risk reward setting. So now you may be wondering, all right, here's the whole purpose of this video. It's telling you why you need to be able to make sure you're getting good entries at support resistance zones. It is not because you can predict where price is going to go. You can't predict where price is going to go with technical analysis or support resistance or any other crazy, insane concept you might learn from schizophrenic people here on YouTube making videos claiming to know what they're doing in trading. None of that stuff has any predictive power, but that's okay. And why it's okay is because technical analysis gives you an amazing way of controlling risk. I'm going to show you an example. Let's say price comes up into this zone and then it starts bouncing, and then instead we just take the exact same trade, right? A sell. And in fact, I'm even going to clone this trade and drag it out. But instead of entering at the zone, let's say we enter down here, okay? So we enter after it pulls away. Well, if you have your stop loss in the same location and your profit target in the same location, now you have a negative risk to reward ratio, okay? So the same move happens, right? It moves from up here to down here. The same moves happen, but you're making less than whatever it is you're risking. If you're risking $1,000 on this, you're going to make a little over $600 in profit after fees and commissions. If this wins, right? If this wins right here, and you're risking like $1,000 on this, and it goes to the profit target, you're going to make $2,000. And again, it's the same trading idea, right? The trading idea is you think it'll go from this arbitrary point on the chart down here to this arbitrary point. With the same trading idea and the same outcome, you make more by entering at the support resistance zone instead of not entering at or near the major support resistance zone. This is the beauty behind it. It makes for a very viable, sexy risk-reward scenario. So let's say that price, let's say it comes down here, and then you're like, okay, I think it's going to drop. And so you can choose to enter right there. Now you have about a 1-to-1 risk-reward ratio. That's perfectly fine. But if you look at it this way, you say, okay, it could drop from there. But if I enter there and it comes back up, I'd be in drawdown, and then it'll probably bounce at the resistance zone if it's going to bounce at all, because obviously it could go up and spike up. But if you simply wait for price to come a little bit deeper into the zone and you ensure that your entries are somewhere inside the zone that you draw, right? Generally about halfway through is pretty good, right? If you're entering right at the beginning, as soon as price gets into the zone, you're probably leaving a little bit of money on the table because you could probably get a little bit better, more optimal of an entry. Now, by contrast, if you're waiting for price to get all the way really deep into the zone, that's also kind of a double-edged sword, because while you will get really good entries if price bounces at that region where you think it might bounce, you won't get as many trading opportunities, and you can miss a lot of perfectly fine trades just because you're trying to be so specific about entering at the very, very tippy top of the zone. Price isn't always going to pin that far. So I like to enter nice and just right. You know, the porridge is not too hot and the porridge is not so cold. The porridge is just right. You know, I'm that little bear from the story of the 3 bears with the porridge. You know, I like entering the middle of the zone. I think maybe that would work for you too. Try it out. So if you enter in the middle of the zone, it gives you like a nice little risk reward setting. So what we're going to do is we're going to monitor this trade, right? I'm going to play it forward, and we're going to use a little bit of context here, right? We're going to use 2% of our brains and have a little bit of judgment. Now, there's going to be a couple things that can happen, right? The 3 most obvious things is that it goes up, it goes down, or it starts kind of going sideways and it doesn't immediately go up or down. Those are one of the 3 things that can happen. So I'm going to play it forward 1 candle at a time, and we're going to make all of our decisions here. So the next candle, price just floats at the zone. The next candle, price tries to break above the zone, and then it pulls back a little bit. So what I'll do is I'll go ahead and just adjust this zone just a little bit higher, just to kind of account for like these little wicks over here and a little portion of that price action candle right here. So we're going to see what happens. Price tries to get higher, then quickly starts to fall. We have a candlestick that tried to go a little bit higher, couldn't break the high, then it started falling more. Ooh, we have a candle come all the way back, tries to break the high, but fails and pulls back down a little bit. But this is a sign that buyers might be trying to take price higher. We have another candle go up and close right there. Now, if price starts breaking these highs, I'm probably just going to exit this trade a little bit early. Price tried to break higher, came back down, closed below those highs. This one's looking like it's going to try to make a run for the upside. Let's see. Okay, it doesn't. It can't hold above those highs. It can't break. What we're doing here is this is just called price action, right? It's just called price action trading. You're entering a trade based off a simple idea. Maybe it'll bounce here, maybe it won't. And then after you enter the trade, you then manage it dynamically with a little bit of price action discernment, using your discretion, your intuition, all of your applied experience from trading, seeing the same thing a million times over and over again for almost 10 years. And that kind of helps you make decisions that are in your best interest from a risk perspective, meaning you can just get out of losing trades a little bit earlier, usually. And you can also hold your winning trades to the full profit target, usually, depending on the context. So for now, we're just going to keep playing it forward candle by candle. Remember, anything can happen. We've just sold at a resistance zone with a stop loss above and a target somewhere lower. You don't know what will happen. Price can do anything crazy right now. So now we're finding some support here at these lows. I'm just going to draw a little tiny zone right here just to kind of show price is struggling to break below those lows. I'm going to adjust the top of this zone just a little bit higher to kind of account for those candlesticks up there. And we are going to play it forward candle by candle. So it tries to go up, comes down a little bit, goes sideways there, starts to go up here, goes up here. We got a big bull candle. I'm convinced this is probably going to break past the highs here of this zone. But I still think it's worth staying in a trade unless that high gets broken over there. So it pulls back, but we got strong bullish rejection. We got that big bull candle. Okay, finally, so we have a push up above the zone, yet it's still pulled back and it closed underneath these highs. So, I mean, technically this is still fine, unless we make a new high and break. At this point, I'd probably call it here. So this trade, we're going to close it here. This is going to be a 0.75 units of loss, right? So if we risked $1,000, it's going to be minus 0.75 units of R. So that is where I'm going to get out of the trade. So what we've done is we used the support resistance to be able to get into a trade that presented an optimal risk-reward scenario. It went into about a 1-to-1 profit, and then it pulled back, and then it went into drawdown and sideways and this and that. We ended up getting out at a small loss, right? So if we'd won, we would have made more than double than what we lost on this one. So we've lost this trade. We're going to move on to the next one. And as a matter of fact, let's play it out to see what would have happened. Right before we do that, I'm going to draw that zone right there because I think if price can get to that high, that would present a really nice little trade. As a matter of fact, it looks like it's bounced there multiple times with the exception of this crazy spike through it. But I'm going to set an alert, a quote-unquote alert, because you can't do it in replay mode. You can only set this little horizontal line thing. I set one like right about there, about halfway in between the zone. Okay, so this one was 3/4 of 1R risk, so let's just wait and see what happens. So as you see, that one would have hit the stop loss, and that would have hit the stop loss for a full 1R. Now we have price come up here to the alert, so as usual, just like we did on this first one, you see how we entered right there at where the alert was at? As soon as price gets there into the zone, let's just say it got to the zone, but then we waited for the candle to close, so that way we were waiting, it wouldn't like spike through and break through the zone. Let's say we entered on the candle close, so just a little bit below the entry, not the perfect entry, we have 2 or 3 pips crappier of an entry, but I mean, it is what it is. It's still right there in the zone. You're going to see again why it's very important to enter at zones and not before price gets to the zone, not when price is outside of a zone, and not when price just gets into a zone, right? You want to let it kind of have a nice little push deep into the zone. That's why it's easy to just structure it with alerts. So we structure it with alerts. Say we entered right there. Where would the stop reasonably go on this? Well, putting it right there is a little bit too close. If we put it right there, then price could just jump above that previous high, and it could cause a loss. That's not necessary. However, if we're setting the stop like all the way up above here, right, we could probably skip the trade, because in this case now we'd have to have a 1 to 2 way down here. It'd have to break past all these zones. It just doesn't seem optimal. So this is a little bit too close. This is a little bit too far. Now we need to find something just right. I'm going to say right here. And if you need to draw it out, to be able to show yourself, okay, what's reasonable? Draw it out on the chart. I mean, pretend the candle goes up here. Would you want to close the trade? Well, it's just getting to the previous highs that have pushed here into the zone before. So it's probably not that big of a deal, right? But if price pushed all the way up here, that's probably a moment in that general region where you'd probably be thinking to yourself, okay, this has literally broken past the zone. It hasn't broken past it by a little bit, where it just pins and kind of leaves a little wick, an adorable, cute little bearish wick. I just love happy little wicks like that. I call my losing trades happy accidents, even though I may lose like $20, $30, $40,000 on a losing trade sometimes. I might make $50, $60, $70,000 on a winning trade. But on a losing trade, we just call those happy little accident wicks where it just spikes out and takes you out. So I'm going to go ahead and elect to put that stop loss like just right here in this general region. Okay. Now we need to have a profit target that makes sense. So it's going to be a 1 to 2 risk to reward ratio, which is right here. The 1 to 2 risk to reward ratio is right down there. So price really has to have a move pretty deep, pretty much to around like all these lows right here. So what I'm going to do is, for the time being, I'm just going to remove that big, thick, heavy, crazy, wild zone. I'm just going to say if price can get back to the previous lows, right? Technically a little bit before it. It doesn't even have to get all the way to the previous lows. It just has to get right there. And if it comes down to the previous lows, well, great, all the better. That yellow line I will remove since we no longer need the alert. And we will see what happens. Perhaps price has a run down further. Perhaps price turns around and just makes a new higher high and hits the stop loss. We're going to manage it dynamically, and we're going to go candle by candle. So, sip your cup of tea, pop in a little nicotine pouch, relax nice and slow, and we're just going to go ahead and take it candle by candle. Super, super fun. So price tries to move up, but then it pushes back down really quickly with this bearish candle. We can go ahead and hit the little next candle, boys and girls. So it's trying to push up. What I see here is it's just trying to find like a little break and retest situation here. It's a lot of people closing their sells because they got into quick profit. A lot of people getting into buys maybe. So we're going to see what happens, right? Oh, start going to the downside. Oh, we start breaking. Exciting. We broke, but we got pushed up really, really quickly. The buyers and sellers are fighting. They're literally punching each other at that zone. The sellers are like, we need to break through. But the buyers are like, no, bro, we need to actually go back the other way. And so you see a huge area where price was just like waving through. And then it just leaves this wick of it's like a battlefield of dead soldiers of buyers and sellers. So we're going to play it forward. We have another candle continuing to more profit. So remember, anything can happen in here. A lot of people will start doing really weird stuff at this point. They're going to move their stop into profit. It's not a horrible thing. It's not the end of the world. It's just not my personal favorite because I found it just lowers the win rate significantly. Price pulls back. Price is not perfect. Price can be volatile at times. When you start doing that, you do what's called, quote, smothering the trade. Just a colloquial expression that sort of explains that, hey, you're moving your stops a little bit too close to current market price and you're just going to get pinned out more on price just having its basic volatility. And then you never actually let the higher time frame outcome come to fruition. So we're not going to do anything. I'm going to keep the same stop, same same everything. I'm not going to close any portion of it. I'll play it candle by candle. So in this case, price comes down and it hits the profit target. So if we're looking at this in terms of how much R we made, we're all pirates, okay? We're trying to get that R, we're trying to get the R. I'm trying to get this was really embarrassing. I should never do that again in a YouTube video. It's really embarrassing. So we got plus 2R. 2R, we got negative 0.75R. So what this is if I've done my calculations correctly, that means we've made $9 trillion just on those two sets. I'm just kidding. 2 minus 0.75, we got 1.25R. Now what does this mean? This means that if I, or if you, or if my dog Ruby, who's asleep on the couch right now, risked $1,000 for each of these trades, we would have taken a total of 2 trades. We would have had a 50% win rate, 1 loss and 1 win. And yet the total profit at $1,000 risk on each trade would have netted us $1,250 profit. You can pretty much, you're pretty much a billionaire at that point. Maybe not where I live, but What this shows is that all you need is simple support and resistance. You don't need to be doing all these crazy things. It is not necessary. And when you're here on the 4-hour time frame, you saw how peaceful and easy it was, with me sitting here. I don't even have a cup of tea and I don't even have a nicotine pouch in right now. And I was still able to stay perfectly calm as we hit candle by candle on the replay tool. It took us what, maybe like 10 seconds to analyze each candle? Not even that, maybe like 5 seconds. If you're doing this in real life and you're using the 4-hour time frame, right? You set the alert above and below price at the next super clear zones that are obvious to you, my sweet friend. And then what you do is you just wait for price to get there. It could be the middle of the night, 2 a.m., you wake up to go to the bathroom and you look at your phone, you're like, whoa, AUD CAD is at the support zone. Euro USD is at the resistance zone. BTC USD is at 0. I'm just kidding, not BTC. Please God, not BTC. But you look at your phone, you get the alert, and then you place the trade that you've already pre-planned, by the way. You've already got the risk reward, you've already got where the entry is going to be, the stop's going to be, the target's going to be. You've already calculated the lot size, like we'll do 2.73 lots, and that's good stop loss here, and it's going to be $1,000 risk. And you can set all this up yourself. And with these very, very simple trades, you place the trade, that takes like less than 30 seconds. And then you just have to check the chart once every 4 hours to see how the next candle closed. This is called managing the trade dynamically and using a concept called price action discernment. And by using those very, very simple things, right, you're making a series of super simple, predictable, consistent, sustainable, sexy decisions. And with those decisions, right, during the waking day, there's only 6 new candles painted per day on the 4-hour chart. 24 hours in a day, each 4-hour candle, times 6, 24 hours, equals $1 million profit. No, I'm just playing. And so you only have to look at really like 3 or 4 new candles every day, right? Because that's your waking hours. If you're awake, say 16 hours throughout the day, that's 4 new candles on the 4-hour chart. It's not a lot of work. It takes almost no time. I myself rarely spend more than an hour. I lied, maybe an hour and a half per day. I admit it, guys. Okay, I spend longer than an hour per day on charts. I have nothing else to do except yell here in YouTube videos, here in my high-rise apartment, while my dog snores on the couch. I only spend an hour to an hour and a half, maybe sometimes 2 hours per day. Sometimes I'll just look at crypto markets obsessively as I watch Solana or Bitcoin just stampede upwards. But really, even if you have less than an hour a day, it doesn't take much time to do this. This is very, very, very simple. I really actually don't know, frankly, how to make it any simpler, except just blindfolding yourself and entering buy and sell. But then again, if you can't visually see the chart, then you can't set up your risk structure in such a way that allows you to profit a little bit more in the long term than whatever it is you lose. And so with this, entering at the support resistance zones are very important. You've seen why right here. And now we can clear out this chart, and then you can start fresh. And you do the same thing over and over and over and over and over again. My trading approach has shifted so much over the past decade. I don't even want to talk about my first 2 years of trading because it was all over the place. And then I got a little bit of consistency and a bunch of different stuff. I will tell you, between you and me, and all the other thousands of people that may watch this video, I will tell you from firsthand experience, keeping it very, very simple and then controlling risk, using basically just support and resistance, that has worked the best for me out of anything else. And that is why, regardless of all the other stuff I've tried and experimented with and all these crazy, fancy, complicated, super shiny strategies, everything has always gravitated back to just incorporating a little bit of simple support and resistance concepts, a little bit of price action discernment and analysis, and pairing those with a nice little cute risk management structure, which allows me to profit a little bit more in the long run than I lose on all the losing trades in the long run. And if you do the same thing, you can keep things simple and you can control risk. You, my friend, not only do you have a beautiful, profitable trading approach, but you have a trading approach that is so simple and easy to execute. I'll tell you what, if you want my personal help doing this, go and book a call with me on my website. You can go fill it. We have a little application. I'll put a link in the description. You can book a call with me. We'll hop on a call. You, me, if I'm not available, I'll have my team hop on a call with you. We'll talk about you and your trading. We'll see if we can help you and work with you. I can help you implement all this stuff in real time. You can work with me for a month or 2 months or 3 months or, whatever you want. And what we can do is we can set this up in such a way that works for you your time constraints, the amount of capital you have to trade with. We will even give you a virtual complimentary pat on the back for emotional support as you go through your trading journey. And you can do all of this right now by clicking the link in the description of this video. You go to my website, check out a little bit about what mentorship for me would look like. And if you like, you can apply for it and you can book a call with me or my team, depending on who's available. I've got 2 employees who work for me. If I'm not available because I'm on a coaching call with someone or I'm yelling on a YouTube video, my team will hop on with you. We'll discuss everything. We'll see if you're a good fit. And perhaps I could help you personally do all of this yourself. Now, again, if you'd like to see a little bit more, I have an Instagram account. You can check out my Instagram. It is, my new Instagram account is at Nick Sean Trades. It's spelled just like this. Okay, it doesn't have 2 S's at the end. That one is a scam account. Do not, a bunch of other accounts might follow you. It is spelled exactly like this. Be very careful. There's a bunch of other accounts in here. You can follow me on Instagram. I post a lot of my live trades, a lot of my results on there. Like I'll take the trade and then I'll screenshot it right when I take it and just post it on Instagram. Then you can just see the trades I'm taking. You can see the P&L, see the profit and loss. There was one day last week where I made over $100,000 in a single day. It's absolutely mind-numbing that that's like my first year trading. I made like, not from trading, but from all my jobs and stuff, I made like 30K for the year. That's wild to think I made more than 3 times that in one day, just 9 years later. I mean, trading has completely changed my life. I get to wake up on Sundays like today and just kind of screw around, make a little YouTube video. I'm gonna go walk my dog after this. I'm probably gonna go to the shooting range, have fun popping off a little rounds. Probably gonna go to the cigar lounge, smoke a cigar and just relax. I absolutely love my life and I wouldn't have been able to have done it without trading. And I wouldn't have been able to have done it in a sane way without keeping things simple and controlling risk. So that's my wish for you, is that you keep things simple and you control risk. I like that. You like that. I like this video. You like this video. And if that's the case, stay tuned for my next ones. I'm not going to ask you to subscribe. I'm not your dad. And if you call me daddy, I kind of like that. But aside from that, if you subscribe to my YouTube channel, this one that I've just started brand new, fresh, everything from the ground up, my future videos are going to go into a lot more detail about the specifics and the mechanics behind all this stuff I'm discussing with you. So if you like this video, cool. If you want to subscribe, cool. If you want to leave a comment, cool. I will see you in the next one, my friend. Have a good one. Cheers. Bye. Mwah.